Welcome back to FreightWaves Now on this Tuesday morning. Here with Andrew Cox, we're talking all about what's going on in his point of sale newsletter this week. A little bit about Nike, a little bit about the J's on your feet.
Yeah, Nike had an incredible quarter. They just reported last week, so they're on a fiscal schedule. So it was their quarter that ended May 31st, and they gave Q4 and their full year results, and it was just stellar. I was very impressed, and I think that there's a lot to learn from what Nike is doing from a strategic and from a financial standpoint, and they're just getting started. I think that the benefits of what they're doing is just now being reaped. And really what the move is a move away from wholesale and towards more direct-to-consumer business. They're trying to own more of the sales channel, own more of the customer experience, and keep people going through Nike's channels. And because Nike's channels are awesome. Like they have great apps, they've built an incredible digital ecosystem, and we can talk about their margins and whatnot. They're doing a really good job. I was just very impressed by their quarter.
And so Nike, of course, from my experience interacting with them all the time, they have really great customer support. They ship to you really, really quickly. Everything that you buy from them is tracked really well from point A to point B to your doorstep. And it's all just kind of a really, really great experience that comes with them. So they absolutely capitalized on the shift to e-commerce back in 2020. Did they also capitalize on the fact that more people had more time to exercise, work out, so they got more investment in their gear?
Yeah, if you look back at they actually did see sales decline for much of 2020. Really, they saw things ramp back up in the beginning of 2021 as lockdowns were, brought back down. Gyms were reopened. You saw people traveling again. That is when they've really seen the sales boost. Sales were up. They actually pulled in $12 billion in the most recent quarter. That's a record for them. They're expecting $50 billion in sales this year. So that would be a record for Nike. And you're right about their digital ecosystem, way that they track things. They made big investments in supply chain about 5 years ago in their digital supply chain to enable this. And I think that this is going to become more important as we emerge from the COVID pandemic. Direct-to-consumer sales, yes, higher margin, higher average selling cost. That is easy to see. But really what the value is and what Amazon understands, what all of the great retailers online understand is that the value of that data. Because what that data allows you to do is allows you to really build digital supply chains, knowing where you need the product, how much of it you need, where you need it to be placed, and how quickly you can get it to places. You can, you can use inventory in different ways if you know where everything is and if you own the entire sales process, and that's what Nike's doing. And it's really valuable. They expanded margins 850 basis points this quarter alone. That is unbelievable. I think people are and they're expecting to expand even further throughout the year, another 150 basis points of expansion in gross margin throughout this year. And they're doing that through more direct sales, through cutting ties with undifferentiated retailers, really focusing in on what they can control right now. And I think that's what's going to be a winning strategy. They're focusing on what is being sold, how it's being sold, and how much of it is being sold, and in what channels it's being sold. And that is what they can control. They're still dealing with supply chain disruptions, certainly, but they're navigating and handling what they can control.
So Nike had built this really, really good digital supply chain prior to the pandemic, and you can say they were kind of set up for success for their changes and the challenges that came along. Are they kind of an example for what other apparel and sporting good retailers should be doing, to prepare for the next major disruption that happens?
Definitely so. They are setting themselves apart. Like I think that you talked to me earlier about why they're so popular on TikTok and on with like the younger generations, is that they're an indelible brand, and they've been able to climb up market to elderly people, to down market to Gen Z and the youngest generations. And they're perfectly set up like this. And because of their investments in supply chain, because of their investments in digital ecosystem, creating these unique customer experiences, they're building something that other retailers and other brands will follow. Look at Under Armour. They're doing something very similar. They're trying to cut ties with undifferentiated retailers, opening up more stores, focusing on their channels, things that they can control. And they're actually lifting their brand while they do it. Nike's doing the same thing when they cut ties with Amazon and they stopped selling on many different places like that. They actually were able to reestablish their brand as the world leader in sports. And I think Under Armour will do something similar, and they're taking a very similar path as what Nike has taken.
So you mentioned that direct-to-consumer model that they're going with from Nike just in general. Talk to me a little bit about how they've kind of funneled into these other retailers' e-commerce platforms, like Dick's Sporting Goods, for example.
Yeah, so that's actually a really good question. They've come out and said that our partners are very important to us. Our vendors, don't get it twisted that we are going away completely from vendors. They believe in Dick's Sporting Goods, in JD.com, in Finish Line, in Foot Locker, in these places that have the they have the space and they have the capacity to offer something special for Nike, to offer a branded Nike section, to give create some sort of relationship between Nike and the customer, even if it's not in a Nike store. That's what they want. So they're cutting ties with Big Five and some of the sporting goods. Many of the off-pricers. You're not going to see Nike, even the lower end Nikes. You're not going to see them at DSW and some of those other places like that. So you're really going to. They're only the vendors are very important to them, but you have to provide Nike a differentiated, special experience for customers.
Do you think that this is going to have any bearing on their outlet stores? I mean, I love a good Nike outlet. You go, you find some deals, you find some great shoes, and they don't cost you an arm and a leg.
Yeah, no, actually they are full in on the outlet store style as well. They've said that they're opening up concept stores, they're opening up full size stores, and they have no plans to close any warehouse or outlet stores because that acts as a really good place for them. That is becoming their off-price retail rather than selling it at Big Five. You can go to a Nike outlet, place like that. So there's no plans to close those.
Maybe now we can petition Nike to bring an outlet a little closer to Chattanooga. It's like there's one in Nashville. There's one that's down in
Tanger.
Calhoun.
Yeah, you go about an hour and 15.
Love those Nike shoes, and I like to run in them, so.
Wear them out.
Wear them out, exactly. Andrew, thanks so much for joining us this morning. Point of Sale, of course, the newsletter dropped yesterday. Point of Sale show airs tomorrow afternoon, and you've got great quarter guys this afternoon, too. Anything exciting coming up?
That's right. Yeah, we're going to talk to Route for Me, a digital router that has some strong thoughts about Prime Day and about parcel shipping, so it should be really interesting. We're also going to have Anthony Smith on there. We'll talk a little economic data. It's going to be great.
Catch that at 3 o'clock today.